A common misconception is that only zero tax countries can be tax havens, and they're usually referred as that. So this is more a traditional understanding of taxes. But today we're going to make a twist and speak about some not so traditional places that at the first glance might not necessarily look as tax havens, but they can certainly act as so. I'm Jovana from Nomad Capitalist, where we help 7- and 8-figure entrepreneurs go where they are treated the best. And that, in most of the cases, includes reducing their personal or business taxes by relocating or moving their business to a low tax place or place that acts like a low tax place. So before I start speaking about today's topic, I would just refer back and clarify some of the terms, just that we're all on the same page. So by tax haven, what we're referring to is a place where you can pay small taxes or not pay taxes at all. But why is it important to have a tax residency or a place where you're paying taxes? And what is that? So a tax residence, as the name says, it's a place where you're paying your taxes, where you're a fiscal resident, and it's different from a residence. Usually there are different procedures to acquire it. So why is it important to have one? Usually people who are perpetual travelers or digital nomads, they just think that they can, fly from one place to another without ever establishing a tax residence, and that way avoid paying taxes. There are a couple of reasons actually why it's crucial to have a tax residence. The first reason is actually avoiding paying huge taxes in place that you do not wish to. So if you are coming from a high tax country or you're frequently visiting some high tax countries and you do not have tax residence established anywhere else, you might be deemed as their tax resident, right? So that's obviously in most of the cases not the most beneficial situation for you, and you might end up paying huge taxes to some places that you didn't want to, just because maybe you have a closer connection with those countries compared to every other single country. And the second very important reason is banking. So in order to really get a good quality banking that will ensure that you can diversify your assets, it is important to have a tax residence. So I'm sure you're all up until now familiar with Common Reporting Standard, FATCA for U.S. citizen. Basically, banks want to make sure to know in which places you're paying your taxes and that you're not evading your taxes. So in most of the cases, again, most frequently, you will not be able to open any offshore account without having that tax ID number. So in order to ensure that your finances are working properly, ensure a good cash flow for yourself, obviously you need a good supporting banking system, and a tax resident facilitates that. Today we're going to speak about a couple of places where you potentially want to become a tax resident if you are looking to reduce the cost, not only cost of your tax bill, but also your housing costs. If you're looking for more flexible options for exploring trifecta lifestyle, we spoke about trifecta in so many of our previous videos. And if you want to have a less complex corporate structure, so you do not wish to go and figure out how every single rule works, permanent establishment, CFC, which jurisdiction want to work best for you, but you want something very simple. So one of the places that offers that is Belize. So Belize has a qualified retired pension program that any person older than 45 can qualify if that person has 2,000 monthly or 24,000 annual income generated from any source outside of Belize. And what it gives you with that, obviously, besides residence permit in Belize, you're also getting a tax residence. In order to maintain that tax residence, the best thing is that you can be only 30 days in the country. Belize does not tax worldwide income, capital gain, or inherent tax. So if you're, if you have a company in another country than Belize, you can use your funds in Belize. You can move your money to Belize. Obviously, we do not necessarily advise banking there or putting all of your money there. But obviously, this option is really good for people that cannot spend that much time in one country. So as we said, with only 30 days of spending in Belize, you get residence and tax residence. One of the other countries that people also do not think much about is Nicaragua. And the reason why this country is interesting is because it is a territorial tax system, meaning that there are no taxes on worldwide income. So Nicaragua has investor permanent residence program that allows you to invest in real estate or local business. Real estate in Nicaragua is quite cheap. You can find so many good deals for $100,000 or less. And obviously with that, you're getting a residence permit. And in order to become a tax resident and benefit from their territorial tax system, you will need to spend, close to 6 months there or have closer connections with those countries. So if you have a property there, maybe gym membership, couple other things, you're good to go. Also in the same region, we have Costa Rica, Panama, that also can serve as very good tax havens due to territoriality of their tax system. So no taxation on worldwide income again. So if you have your companies outside of those countries, you can benefit from it. One of my personally favorites, tax country that acts as a tax haven is Uruguay. And the reason is because Uruguay offers 10 years tax exemption on worldwide income, which effectively comes up to 11 years. We have a new video about Uruguay tax system and why we consider it as an IT country, so make sure that you check it. So basically what you're getting is 11 years of an exemption for any worldwide taxes. Uruguay has like a mix of territorial and worldwide system where only interest and dividends are taxable in that country. Again, under this 11 years exclusion, you won't be paying anything during that time period. You can also very easily establish a tax residence. You can be 6 months in the country, but also if you invest $380,000 US dollars in a property, you can get a tax residency with only spending 60 days there. Again, it's really good option for those people that cannot commit a certain amount of time in that specific country. Uruguay does offer a citizenship option after 3 to 5 years, depending whether you're living there with your spouse or as a single. So the whole package, like immigration and taxation, are really great, and you can widely benefit from it. So the next country where you can benefit from establishing a tax residence is Antigua and Barbuda. So this country does not offers only very easy citizenship by investment that can come in 6 to 8 months, but also offers great tax advantages, for yourself personally. The country does not have income or capital gain tax, and really allows you to establish a tax residence there with a little to no presence. You can choose whether you want to go with this traditional route of spending close to 6 months there. And obviously, because Antigua does not impose any income tax, you won't be paying any tax there. But again, if you're a perpetual traveler, or you cannot commit to spending 6 months there, or you simply do not want to commit, you only need a tax residence, you can opt for an option where you're spending 30 days per year in Antigua. So basically going on a vacation and paying a flat tax fee of $20,000 to Antiguan tax revenue agency. Besides, paying this fixed flat tax, in order to opt for that option, you will need to demonstrate that you have wealth of $100,000, and you will need to maintain a place of residence there at all the time. So basically, what does it mean? That you will need to have maybe some rental property, or pretty much it can be a room. Obviously, we don't want to spend time that is available to you to all the time. So if you're opting to maybe, purchase a property, you cannot rent it out to other people. So I know that some of you that are very familiar with our channel and are listening us regularly might be thinking, okay, this is an interesting option because if I purchase a citizenship by investment with real estate option, this gives me a real estate and I can get a tax residence, through that route and basically using that property. But this is actually not possible because most of the properties that are available under real estate option are really timeshare properties where you are purchasing shares of a condominium or a hotel. So this won't fall, this won't be a qualifying property for this tax residence. So if you want this kind of whole package, kind of Antiguan citizenship and tax residence, definitely the best way you can do is, go through the donation route and then separately opt for a tax residence. Also, one of Caribbean countries that offers citizenship by investment is St. Kitts, and also offers great tax residence. So there are no taxes on worldwide income, long-term capital gains, inheritance, or gift taxes. So capital gains tax is only levied if the asset is sold within 12 months from the date of acquisition. So short-term capital gains and tax rate on that is 20%. So for the tax residence, you will need to spend 2 months on the island. And actually here you can really utilize your citizenship by investment if you get it this way. This can be considered as a strong connection and reason to obtain this tax identification number. Another Caribbean country where you can benefit from low taxes and easy tax residence is Barbados. Though, if you're simply looking at a tax code, Barbados does have a worldwide taxation, but it does not have worldwide taxation for non-dom. So this is a very common term in the UK, Ireland, and generally common law countries. So basically, the law differentiates between domicile and residence. So domicile is a term that they are using that if you're currently using on the same place, but without an intention to stay there permanently. So without an intention to actually become a citizen, or just to live there your whole life. So Barbados, again, does not have taxes on worldwide income if you opt for non-dom. So there are a couple of ways that you can become a tax resident of Barbados. As in every other country, they have this six months rule or 183 days, but you can also use some of the loopholes that they have. So basically, if you establish a Barbados company there, it can be an international company that generally has very low taxes, and you have accommodation in Barbados. Again, this can be a bit on a higher end, and you're paying yourself payroll tax as one of employees of that company that can go up to 8.5%. You can become a tax resident with only spending close to 2 weeks in Barbados. So this is a great option, again, for people that do not wish to spend a lot of time on one place. So again, to clarify this option with a company, so this does not have to be your operating company, your main company, and it's not advisable. It can be a company that you establish basically only to hire yourself. You're selling your services probably to your main company, paying yourself a payroll and payroll tax. It can be, minimal wage, and taxes on that are close to like 2%. So obviously there will be some sunk costs, but in general, it can be really good for those people that are really risking to become a tax resident in some high tax country. And with this additional cost, they can get a Barbados tax certificate. So in today's videos, we're really focused only on Caribbean or Central America or Latin America countries that can offer you tax residence that really acts like tax haven, where you pay very low or zero in taxes. If you would like to hear more about other regions, please comment below or check our website for more details.